What's up, what's up, what's up, everybody? Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we finally got a little bit of movement yesterday. The markets decided to step up, do some moving, move forward, and well, maybe move backward, but that's okay. We're going to take a look at that today like we do each and every day. For those of you new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates and all of the fun jazz that we talk about on a regular basis. So one of the things I want to talk about from yesterday that I think a lot of people tend to overlook, and I'll be the first to tell you, you're going to look, we had a lot of levels yesterday, a lot of levels. Some worked out, right? Most didn't. I got stopped out on a fair amount of positions, and that's okay. I say this all the time. When you're trend following, some days are going to be what we call setup days. And the way that you think of a setup day is that a setup day only helps you to realize that you've got better setups coming in the future. And so here's the way I look at it. Here's the analogy that I use. Whether you watch American football or whether you watch, what the rest of the world calls football, sometimes you've got to stop the attack and realize that you're not going to get anywhere, and then you pull back a little bit, right? So in the world of American football, you're not going to get a touchdown every drive. You're not going to even get a first down every drive. Sometimes you're going to punt, and a couple of punts can strategically be used in order to set up field position for better opportunities in the future, right? In what the rest of the world calls football, sometimes the ball's not always going forward. Sometimes they're going to come back in order to set the play up, in order to move on forward. And in the world of trading, when we have a day like yesterday, what it does better than anything is that it allows us to strategically set ourselves up for the next move, right? Because a lot of times what happens is people have a bad day, or they'll take some losses, and they'll let that emotionally screw with their heads, and that's the mistake. We don't want to let the emotional component mess with your head. Understand that yesterday was a setup day. So as I look at today's markets, and I left my lines on the charts, I always leave my lines on the charts. As I look at the markets today, you're going to see a lot of those levels are not going to be they didn't hold, but that's okay, because now what does it give me going forward? Does that make sense to everybody? Correct, Liz. It is called football for a reason. I try to be respectful, Liz. I make the designation between American football, which is really not football. It's handball, I guess. What, right? All right, so let me go ahead and shrink my head, and we'll get into the markets here real quick. All right. So starting with the ES and looking at the ES yesterday. Now, one of the things that we did talk about on the live trade room Sunday night, what did we say about getting into trades right at market open yesterday? Right? We said yesterday that getting into trades right at market open may not be the best idea. And getting in right at market open was exactly when we came hammering through this level of demand. Now, I will tell you, I anticipated this lower level of demand to hold. I didn't have a whole heck of a lot of confidence in this one, being a 15-minute level formed in the overnight, the hitting right at the open. But I did believe that this level here would hold. And when you're stopped out, boy, this is the way I like to get stopped out, right? Right, just cut right through it. Let's just rip the Band-Aid off, as they say. Yeah, and so looking at what we have now and where we may see some sort of change or reversal. So looking at my 4-hour chart. If I look at my 4-hour chart, I might look at my last swing lows and last swing highs. I'm going to throw my zigzag indicator on there. We can see that I've got a lower swing low, and then technically by the zigzag indicator here, a lower swing high. Now, what that zigzag indicator is telling me is that I've got lower swing low, lower swing high. Tells me I can be a seller. Well, the 1-hour chart is also telling me that I put in a low, which was unable to put in a new high. I put in another low overnight, which was also unable to put in a new high. And so in looking at that, that to me tells me that we could have a pretty good breakdown right below this area here, right below this 36.78. Now that's not too far away from current price at this moment. And we are also setting up right now. It's not official as of yet, although it's fairly clean, where we just came off of this little wick over wick area right here as well. So if you're more aggressive and you want to play on the short side, you've got that aggressive wick over wick entry here. I think probably the smarter play is to wait for some sort of a basing area here and take a breakdown. But essentially what we're leaning on here is all of these wicks with this upper selling pressure. Okay, all of those wicks with the upper selling pressure would be the reason that we would look for price to kind of come back down from that region. If we start to rally back up, and let's say we make it up to this wick over wick area up here, or this one up here, well, in that case, making it up to those levels, and let me draw this lower one, making it up to this wick over wick is a pretty clean area, but will that change our downtrend? Well, that depends. If we have our next move as something that comes down like this, then back up, and then back down, and then we start to do something more like this, well, then that supply level at that point would be in the context of an uptrend, and it wouldn't be valid, right? But if we just shoot up to there, then it's still going to be in the context of a downtrend. It would still be valid, right? So it really depends on the arrival that we have to that overhead wick over wick to see whether that would be a valid level or not. I don't know that we're going to make it up to that level today, but right now I think this is a decent little short off of this zone here. NASDAQ, same picture. Let me remove these two here. And the NASDAQ also, now by the time we made it down, after a good demand levels gets cut through like a knife through butter, I then believe all the demand levels switch to confirmation entries. So it didn't give me any more entries after that. And that was what we put in the trade update yesterday, was that, you know, we were not looking at a level after that, and we were switching everything at that point to pure confirmation levels. So that would be where we're looking now for where's the supply level above me in order to get a reversal. Well, same thing. We weren't able to create a new high. It's bouncing a little bit off this little wick over wick, although not as clean. So your breakdown area would be right around 12,642 in this one if you wanted to play this for the breakdown. Now, this might make sense to play on a 15-minute chart as well, because you've got a tighter stop when you use the 15-minute if you're more concerned with that tighter stop. Let's see. Next, the Russell. So in the rut, oops, that's the NASDAQ. In the rut, we had talked about this line of control yesterday, and we said, well, if we come back above this line of control, price can really continue to move higher. Well, we didn't, and this is a good example of old support acting as new resistance in that area of control. And remember, we talked about the fact that, you know, if we get above this area, then you're in kind of that free, lower risk entry, even though you may not exactly time the entry perfectly, but we were unable to get above there, right? So now there was no demand down below us, so no big shocker that we had the bigger sell-off. I will say in this one, also unable to put in a new overnight high, and so breakdown trade still very much in play. The reversal trade also in play. We're perfectly flat this morning in the Russell, down, you know, basically flat in all of our markets. And so I'm not overly jumpy at looking at either a long or a short in either one of these, but I do think that breakdown is probably the best one, aside from that little wick over wick that we're coming off of here in the S&P, if you decide that that's worth more of a, what's the word I want to use? More of a speculative play. Tricky, medium to longer term. I watched the CCI training today, and nearly everything is still over the 100. You're correct, John. We are still, I mean, I think that when we look at this from a short-term perspective, yesterday was a pretty big pullback. Do I think that that means that we're going to go bearish overall? Not necessarily, right? We said this yesterday. What happens? Everybody, do me a favor, because I know a lot of you guys are here and you watch regularly. What happens pretty much every time the S&P creates a new high? What happens every day? Pretty much every time the S&P creates a new high. Type it in the chat box if you know the answer. And we went back and studied this for a while. That the S&P does this a lot. Now, the other thing to consider is that on our daily chart, retraces. It almost always retraces. On our daily chart, we had seen that there was a clear loss of momentum on our daily chart, okay? So when you see a clear loss of momentum on the daily chart and we still go to a new all-time high, that's a clue that we could very soon roll over. Okay, these when you're at a new all-time high, but you're getting to that all-time high on lower momentum, that's a clue that, okay, we've got our all-time high, but we're probably going to pull back a bit. I wouldn't be surprised to see us pull back into this region down in here, this 3590 region. I wouldn't be surprised about that at all if we pull back into here and then rally higher. Now, I know that there's going to be a lot of uncertainty around what's going to happen with the Senate races in Georgia today to see what, where control of the Senate goes. But, what the market is going to do based upon that is really all I care about. I care about where's the market going to go, and are we going to get a bounce off there? So I'm wondering if today we chop along a little bit sideways, and then in the Globex session overnight we get some better moves. So it's worth kind of considering that as well. All right. So I think that's all we've got today for the equities. Oh, the Dow Jones, same levels were in the Dow. Although the Dow did break off, bounce off of the lowest demand that we had our line drawn. And in the overnight, the Dow actually put in a slightly higher high. So, you might look at that breakout above here. If you're looking, if you're talking about the breakout that Liz just referred to, then you would go above the high. I think that this one's probably better because it put in a higher high, where the Russell's not quite as clean on that higher high. The NASDAQ definitely put in a lower high, and so did the S&P. So the S&P, if you're going to go bullish, actually, the Dow was the one that put in the higher high overnight where nothing else did. All right. Let me share this grid. All right, next, let's go to energies and metals, starting with crude oil. So crude oil yesterday, we looked at this little 15-minute zone. And if you look at this little 15-minute zone, when we identified this little level, price came into here. We got a little move away from that level, poked just above, and then got a pretty big sell-off on that time frame. So a little bit of a move away off of this level, but it popped above. As far as our bigger picture, we had talked about the fact that there's not a whole lot in here because on our bigger picture, we're still inside of that iron condor range that we had talked about, I don't know, nearly a month ago now. And so that one is still moving okay. So that was a pretty good level on that one. I know that I think Justin had a crude oil trade that was set up for those of you guys that were able to get in on that one, although it was an overnight setup for most of us here in the U.S., getting long off of this low and then coming higher. But as far as a reversal level, still the best reversal level that I have is not until that 46, 49 area. Down here, this little wick over wick area, 46.49 by 46.36, and we're pretty far away from that. When I look at any of the other levels that are kind of inside there, there's nothing in here that I am a huge fan of. Why did we not discuss the 1 hour demand at 47.19, Dion says. This one right here, Dion? Well, I didn't have that one on my chart, frankly, because it was a little further away from the pivot, and I like this level down here a bit better. Now, this level that is up here was a pretty good little zone, decent for a reversal, but the pivot area is typically going to be a better level that I see overall. And I think this was the level that was posted in the trade feed for you guys to take a look at that Justin had put out. So I don't cover that one in the DMC, but I think that was the one that Justin had put in there. So all right, next, gold. So looking at gold, we had on our gold opportunities, taking a look at our levels from yesterday, we had a demand level right in here at 1929 that we came really close to, and we were unable to quite get into that position. Didn't quite get us into that trade. The level, in my mind, is still valid. We are coming up to the top of this area here, which is, you can clearly see on the daily chart, but on the 4 hour, it's the origin of this strong move down. Now, we had talked about the fact last week that if we get above these highs, we have clean air to make it all the way up to this area of supply. And this area of supply, a lot of people would consider this high on the curve. Now, you're going against the trend. If you want to short this area of supply, and this area of supply is better to be seen on the 1 hour chart, because on the 1 hour, we wrapped our lines around this basing area here before the very strong drop. We are approaching that level, not approaching it with a tremendous amount of strength or confidence. And so if you decide you want to take this, the only way that I'm going to take this is as a confirmation entry, because you're going against both trend and momentum to take that position. I think that it still could hold. It's just going to have to be a confirmation entry at this point if you decide you want to get into it. And then I really do still like that 15-minute level down below, which is this little rally base, very nice rally formed at a pretty good time of the day. Yeah, Justin does get a lot of his zones from Dwight, and Dwight's zones never lose. I mean, when in doubt, you use a Dwight zone. Last time I checked, I think they had a 109% accuracy was based on his results page. 109% accuracy, and their reward to risk was unlimited reward to no risk. That's what he told me on his website. Because, you can always believe the results pages on every website. All right, so let's go to Nat Gas. So Nat Gas, we talked about this potential move up off of this area above the gap high. We did get a poke above there, and then it just kind of fell right below there very quickly. I mean, within 2 or 3 candles, because it followed the rest of the market. It then came up into our supply level up above, which is a confirmation short, and 6 candles later, it's basically done a whole lot of nothing. And so now what am I looking at? Well, now we're in between areas of supply and demand. We're in the context of a bigger picture upward trend on our 4 hour chart. And so since we're in the context of our bigger picture upward trend, that's why that trade was a confirmation short. So if you took it, you should probably at least have your stop at break even at this point. And if you didn't take it, I certainly wouldn't get into it now. Looking at where we could retrace, I will tell you I like this retracement level from a structural standpoint. I just don't like it from the time of the day that it was created. So structurally, it's good. Time of the day, it's not. This area here is this nice little wick over wick, which was formed at a better time of the day, but it was already retested. So what that tells me is I don't really have much of anything. Structurally, this is good, but I'd have to make it a confirmation entry if I take it. And Nat Gas has been violating zones lately, so I'd rather be safe than sorry. All right. Next, copper. So looking at copper, much like the rest of the world yesterday, right at the market open, we sold off. Sold off right at the market open, and now it's kind of chopping sideways. So really, in my mind, not a whole lot to add on this one. Potentially an area right here worth considering. And that area right there, I think, might be okay on a bit of a retest. So next, ags. Looking at our ags and metals. Oops, let me take this out and share this grid. Really, crude oil has been the one that's not given us as many clean opportunities, but it's been inside of that sideways zone that we talked about for so long. All right. Next. So looking at our ags, starting with soy, ZS. So looking at ZS, we had yesterday talked about a potential for a breakdown below this line. I think it was a break above first, but then a breakdown. And clearly there was no basing there, right? That just broke right through the level and didn't make it to our confirmation reversal demand area. So there was really no trade to be had in ZS. ZS didn't give us an entry of any type yesterday for us to really lean on, but we did reverse hard off of this level, and the agriculturals has moved a lot higher off of yesterday's intraday lows than the equity markets have. Now it's returning back to this area of supply, but I don't know how well that area of supply is gonna really become a shorting opportunity. I actually like it better to maybe slow us down to give you a potential for a breakout trade in here if we start chopping sideways. So that what I think would be probably a better opportunity would be if we base sideways for a breakout. Okay. Corn. So corn yesterday, we did hit our 15-minute level, and then we started to kind of chop around sideways. And so with this, it gave us an opportunity to either exit at break even or just move your stop to break even. And technically it's still running, right? So if you moved your stop to break even, you're probably still in the position for a small profitable gain. And that small profitable gain that you have is a decent little move, but now I need to remove that level altogether. 4-hour chart, I mean, I would expect my momentum to slow down, right? I mean, that's ridiculous, right? I mean, that corn rose super high, and really you need a momentum, a little bit of a pullback, right, on there. I think that we had covered in our trade room Sunday night, we talked about, even utilizing the Bollingers. We've been riding that thing super high, and on the hourly chart, we were overly extended, and we've now reversed back to the other side. So I think that and I don't really dive into, indicators all that much, especially in the DMC, because I don't have time to explain them. But I wouldn't be surprised to see that momentum continue to slow down a little bit. Let's see if we get a reversal off of this area up here. I'm not willing to take a trade on it today. I want some of my levels to be a bit more clean. But I am interested to see, does this supply hold? I'm not willing to short it because we're basing a little bit here before the level. But if that supply holds, then it will set up for good shorts, right? And that's what we do, is we look for those. All right. They're great. Oh, CCI 199. The wheat markets. So looking at wheat, we had a confirmation long that just popped right through. Didn't give us an entry at all. So no harm, no foul in that position. Overnight, we did set up a pretty good level. This is actually probably a fairly clean one. And that was able to propel us to a new high. So if we can make it back to there, that's a good level. I don't know that we're going to make it back to there today, but it should be a good level because it was enough to do that. Yeah, I would agree with that, Liz. A bit half-hearted is a good word, But I think the rally in all the markets has been a bit half-hearted. Now, bean oil was a bit better as it came down, hit our demand level, and then got a pretty good move away from that area. So that actually was a really good mover. That moved pretty well. Now, it didn't move right away. It took, in our 6 candle rule, 1, 2, 3, 4, 5, 6 candles. It was kind of So you could have moved your stop to break even. At the very least, now you should have moved your stop to break even. And I would say that it's a good opportunity to take some profit off the table since it's moved well more than the 2 to 1. And I would look up here at a reversal, potential for a reversal area right in here, since you are talking about that half-hearted rally. This I'm going to remove because we traded more than 50% of the way into the zone. All right. Let me share this one. All right, next. Bonds and currencies. Hey, we finally had the bonds that moved yesterday. A little bit, not a whole lot. Not enough for me to trade it, but it did move as it went up and then came back down. And now basically has gone nowhere. So looking at the bonds, are we trading it yet? Not really. I will say, though, that I am interested in getting above this range. This range here, we got to get above that range. And if we can get above that range, then we're going to have a bit more opportunity through here. Same thing in the ZB, as it's also still very range bound. Although this is a pretty interesting price structure that was created right here on the hourly chart. It's not as clean or not as pretty for a reversal, but it is interesting to see if we can come down from that level. In the euro, so our euro level, euro and the Canadian dollar both on that right at the market open, just like we talked about, being very cautious around trading right at the market open. The market cut right through both of those areas. Yeah, I like that. Weak dollar, cheaper rags. So now on both the euro and the Canadian dollar, I don't have a whole lot of great areas to really lean on, since both of the demand levels broke through, and then we got a little half-hearted rally. I do think that we could get a breakdown below the 78,325 because it was an old support, new resistance, support. If we base here and break, I think that could be a decent run. At the euro, I don't have anything really quite as clear, quite as clean on those positions. And then the other two markets, so the New Zealand dollar, excuse me. We had a breakdown in the New Zealand dollar, a little bit of basing, dropped away. So that breakout worked, hit our target, and then it hit the demand area. Now, the demand area, you may or may not have gotten stopped out if you tried to get long on this, but it actually did wind up running back up on that position. So looking at this now, where's our next area? Because that one did give a nice little run off of that area of demand. But let's start at the 4 hour. My 4 hour, what's my trend direction on my 4 hour? And that's a close one, right? Because the trend direction on here tells me I've got a lower swing high, 3 consecutive lower swing highs. Swing high, swing high, swing high, and 2 consecutive lower swing lows. Swing low, swing low. Sweet chariot, I should probably be looking to short. So, and that's hard to say when you see all of this, right? When you see all of this, it's like, why would I short that thing? But looking at the most recent swing highs and swing lows. Now, one thing else I'm going to add to this is take a look at the daily chart. Okay, our daily chart also way, way, way up. But looking at the daily time period, what do we notice about these candlesticks? Now, today's isn't finished printing, obviously, but selling pressure, selling pressure, selling pressure, right? If I throw my momentum indicator on here, and we'll put this one up. I've got some divergence between my swing highs and my momentum indicator. We are still above the 60 line, so I don't know that any major supply is gonna really hold, right? So I'm not really willing to be a daily seller, but I wanted to at least show that. And when I look at the MACD, you're going to really see that momentum divergence here. Now, does that mean I think we're going to come hammering down for days or weeks at a time? Nope. What I do think, though, is that it sets up that this demand area may not be a great entry, even though structurally it looks clean. I'll probably need to find demand on a bigger picture time period to stop price from dropping. And that might be somewhere down in this region here. So I think we could be in for an intermediate time short opportunity in this position. Now, has one been set up yet? Not cleanly. I've not gotten a clean short setup as of yet. So I'd still need to see a bit of basing, and we could get this area here that becomes a good one. It's just not moved far enough away from there yet. Does that make sense to everybody? I mean, I know that's a little bit deeper into the analysis side of it, but that's the way I'm looking at this from a bigger picture perspective, is that the longer term trend still overall is bullish but showing weakness. The 4-hour trend is technically down, but I don't have a setup for entry on my hourly or my 15-minute chart. All right, Great British Pound. So yesterday we bounced off of this level here in the pound, got a little move away, hit it again in the overnight, got a smaller move away. So when we see little move away, retest, smaller move away, what does that set up for? Sets up for a breakdown, right? This is the setup for a breakdown, and the fact that we were unable to get a higher swing high after we, kind of came back up off the bottom. So if we start basing in here, look for a potential breakdown below that region. Japanese yen, the market came into our 15-minute demand, popped back above it, and then went sideways. So what's our trade rule when we pop back above the level? Right? What does our trade management say? Our trade management say move stop to break even, right? Or close it out for a small profit if you really want to. And that was part of our trade update yesterday, was moving that stop to break even or closing it out for a small profit. Now, if you moved it to break even, you're still in the trade and you're feeling good about it. If you didn't move it to break even and you stopped out, then you took a little bit of profit, you should still be feeling good about it. And don't have FOMO because you took a little profit, okay? I'm going to remove this level now. We're still looking at this as a potential breakout. On our 4-hour, our 4-hour trend is up. Once again, a little bit slower on the momentum side, but 4-hour trend is still up. If we do get a retest on the hourly chart, there is a little, oops, wrong drawing tool. Wick over wick level down here that I think is worth working on. So 97,137. All right, and then the Australian dollar, we had a demand level. No, excuse me, that was our supply level that we had identified yesterday. So our demand level actually got a little bounce off of that zone. Price moved up. The supply level that was created from there. And that supply level was created, we didn't do that in the DMC. That was actually something that I talked about in the trade feed update, that we were looking at that as a 60-minute level. We didn't make it back to it that day. We made it back to it later in the evening. So never gave us gave you a clean entry, but never gave us a good trade because we just chopped along and then popped above it. So if you took that one, because that was a decent little setup on there. But now I see that we weren't able to break any of these highs, and I've got lower swing highs here on the hourly chart. I also do on the 4-hour, right? So it looks a bit like the New Zealand dollar, which I think somebody typed in the chat window earlier. So no mo FOMO. That's a great New Year's resolution. I would say, look to see if we get out of this range before we're really doing a whole lot. So, all right. The 6-bar rule in the UK is everything gets shut down after 6 bars. All I know is I had a few long nights in the UK because of that cascade. Doesn't hurt your head in the morning, though, which is nice. All right, so let me share this one. All right. So today we have, for those of you that are Traders Army members, Justin Krebs is doing our trade class today. It's our longer term positions. So you guys that will join Justin today at 10 a.m. Central. For those of you guys that are not Traders Army members, I look forward to seeing you in tomorrow's daily market commentary. If you guys have any questions about the DMC, send me an email, chuck.fulkerson@tradersarmy.com. Any questions that you have, we do our best to answer them and help you out the best the way that we can. So let me check the chat window real quick, make sure there's no other questions in there. Oh, Amit, thank you. You had sent me the email, and I told you that I would review it, and then I forgot because I suck. But let me go back and do it. Hold on. I sent you a message back that I would review it. So it was on our Aussie, and I want to read it again because I want to make sure that I do it. I want to read the email again. I want to make sure that I do it the right way. You did send me the email on it, and I did respond. Let's see. Breakout on the 15-minute breakout, 3 touches, room to roam. Should I consider a daily zone or not? Breakout, it's 0.7743. So you're looking at the breakout above the high here, Amit, on the 15-minute chart. And your question is, will the supply zone above me stop it? Well, let me go back in time. So and you're referencing this daily supply right here. Correct? So that daily supply that we have there, not phenomenal supply, though not terrible, I think is actually probably a better price target for the supply even further above that. So when I look at that supply, let me go back to my 15-minute. So that for your breakout gives you, I mean, that still gives you a little bit of room, right, to make it from here all the way up to here. So you do have some room to roam. It's not as big as you might want, but even because you're getting in on a 15-minute chart, so you may actually have a limited risk, limited exposure trade. But when I look at this, what I want to do is I'm going to go back and look at the AUD USD. So I'm going to look at the actual currency pair for this. Now, why am I looking at the actual currency pair? Well, the reason I'm looking at the actual currency pair is because then I have no effect for rollover, right? And I want to see what does this do if we don't consider the rollover effect. And it still might be an issue, but this gets rid of the effect for rollover. So sometimes when I go way back in time to look at a currency trade, I'd rather look at the actual currency pair just to see, okay, if rollover is not an issue, what does it look like? Now, that same area of supply that you're referring to on the daily, notice we've already hit it and are coming down from it, and we're basing in front of the level, right? So if you were to see this as a supply level on a daily chart, if you see this supply level here that I just wrapped my lines around on the daily chart, and price is approaching that supply level, what would you say about the quality of that supply level and how price is approaching it? What would you say about the quality? Would you take this short? Would you say that that's a quality area of supply? Knowing that we're basing in front of the level with candles that are giving us selling pressure in front of the level. Yeah, it's kiss of death. So I'm less concerned about that supply level right above the breakout trade since I looked at the currency pair in order to give me that information. Does that make sense to everybody? Seems like it does based on the comments. So I think it's an okay trade, especially because you're getting into it on a 15-minute chart. It minimizes your overall risk and exposure. Okay? All right. So that's all I got, everybody. until tomorrow, peace out. Talk to you soon. Stay safe on your trades. Later.